Hello and welcome to JWB's Property of the Week. My name is Greg Cohen and I'm so excited that you're here. If you are interested in investing in rental properties in Jacksonville, Florida, you've made it to the right place. This is our Property of the Week here for JWB and it's currently available and ready for purchase. And if you are an investor who is maybe a little bit earlier on in the process, if you are somebody who's doing your due diligence, just getting familiar with this asset class, you are also in the right place. We do these properties of the week every week. I reveal one for you, and it is a great learning opportunity so that you can go through this property. I'm going to break down what you should be looking at, and it's going to help you have the confidence that you need when you go to pull the trigger and buy your first rental property or maybe subsequent rental properties here in the Jacksonville market. So welcome. Thank you for being here. If you would like to actually be there the first time I reveal the property of the week, you'll want to join us on the Not Your Average Investor Show, which is a show that I do every Tuesday and Thursday at 12:30 Eastern. It is free. We would love for you to join. We have 50 to 100 friends, clients, other folks in our network join the live call every single week. And you'll want to join the Thursday one specifically because that's where I reveal the property of the week. So you'll want to go to nyais.com. That's nyais.com for Not Your Average Investor Show to register and to get that link and to join us every Thursday at 12:30 so you can be the first to know. Today, we've got an incredible property for you. This property generates 8.94% estimated return on investment and is located in one of JWB's core neighborhoods. The featured property is going to deliver an estimated $186 a month in positive cash flow and is surrounded, and I'm going to show you what I mean by surrounded, but surrounded by over 50 properties within a 1 mile radius that JWB has already executed this exact model on, that a current client has purchased from JWB. We continue to do the management on it. And all of this creates an incredible amount of consistency for you and the ability for us to, of course, perform, but also under promise and over deliver, right? We want to tell you that your returns are going to be here. You have to perform consistently. You have to have the experience. You have to know exactly what the numbers are going to come in at in order to do that. And we also want to build an opportunity to overperform, come in a little bit better. And we certainly have that opportunity here with this home. So without further ado, let me share the screen here and bring this property to you. This is the property at 2130 Holcroft Drive, Jacksonville, Florida, 32208. And the very first thing I always want you to look at when analyzing a rental property to invest in are the returns on investment. And so we're going to assume that you're buying this with conventional financing, as the majority of our clients do, especially now as terms are so advantageous. And so the first thing you'll want to look at is what your total monthly cash flow is. On this property, it's $186 a month estimated for this property here on Holcroft. And what that should really communicate to you is that you've got an asset that is able to take out debt. You're able to take out the debt, meaning that increases your expenses, but you have so much rental income here that it more than covers the expenses that happen on a normal month. And that is so critical for you to be able to invest in an asset that pays for itself, because what you really want is an asset that is an asset, right? Not a liability. It doesn't cost you money every single month to hold this property. And you want it to be scalable, because if you're like many of our clients, you have goals to own more than one rental property. Your goals might dictate that you need to have 3 or 5 or 10. And if it is scalable and it pays for itself, well, then the idea of earning positive cash flow every single month when you own 10 properties is a lot more appetizing than spending $200 a month to hold the asset times 10, right? Nobody wants to hold these assets and go thousands of dollars in the hole every single month. So the fact that it pays for itself is what you should be looking at here. That $186 a month is fantastic, and it now is scalable for you. And that's really what positive cash flow means for me. But positive cash flow is one of the profit centers. There's actually 5 profit centers. And we start to take a better holistic view of all the profit centers when we look at the total return on investment here. You'll see it's estimated at 8.94%. So what we take into account there is all of the net rental income. And then we add in some of the profit centers that you'll be able to enjoy, as well as some additional expenses that happen every so often, right? So specifically, some of the good things you get to add in here, a couple of the profit centers, including tax savings and principal pay down. Tax saving is the money that you don't have to pay on the income you earn compared to what you would have to pay if you had it in a different asset class. Rental properties have great tax advantages. And principal pay down means that the resident is actually paying your loan down for you, which is incredible. You might not see the value in your bank account every single month because the loan value is going down. It doesn't go to your bank account, but there's still real return there because your loan is going down over time. And what an incredible value that is there. We're also going to add in some expenses that happen every once in a while, but when they do, you need to, of course, take them into account. So these expenses, we would be including your maintenance costs, your vacancy costs. These are estimates based on our experience, based on us actually tracking how client portfolios perform over a decade now. We've been tracking our clients' portfolios, so we know with certainty how these are going to perform for you over the long haul. So we take that into account. Those are costs that we include here. And we also include tenant placement fees, which is a fee earned by JWB Property Management every time we put a new resident in your home. Right? Those are fees you're going to earn when you're working with any property management companies, but sometimes rental property investors don't take that into account when seeing what their real return on investment is, or at least in the projections. And so it doesn't create an opportunity for them to actually hit their desired rate of returns. We take a different approach. We want to include all of that up front. The full brunt of your tenant placement fees, we're not going to sort of kind of play games and amortize those or anything there. Those full costs are going to be reflected here, which is important because, again, our goal is to create an opportunity for us to underpromise and overdeliver, and that's one of the ways that we do it. This 8.94% return on investment does not include home price appreciation. Jacksonville is known as a growth market, and since 1991, on average, we've appreciated at a rate of 4.3% per year, which is 19% more than the national average, and which is 34% more than comparable cash flow markets out there. So we are a growth market. But the thing about home price appreciation, if you want to count on it, you have to be invested for the full market cycle. You have to be invested for a 10 to 20 year cycle in order to count on it, because that's how home price appreciation works. In the short run, you know, home prices can go way up, home prices can go down. But over the long haul, what happens is real estate cycles repeat themselves. Home price appreciation comes back to the norm. And so in Jacksonville, that norm, if you give it long enough, is 4.3%. If I was to add that appreciation rate down here, you're going to see these returns on investment jump up a lot. And the reason it went up from roughly 9% to roughly 25% is the value of smart debt, the value of leverage. When the market goes up 4%, but you only have 25% into the property, that's actually a 16% return on investment just from the home price appreciation. And that's how you can really skyrocket your returns, by using smart debt with a provider that can actually minimize your maintenance and vacancy costs, make sure this is an asset and pays for itself every single month. That is the beautiful scenario we're trying to create for you. And that's what we create for clients all day. So there we are, some of the financials there on 2130 Holcroft Drive. Let's look at some of the factors to take into account as well. Your purchase price here is $163,000. That's on the lower end. 4 beds, 2.5 baths. This estimated lease rate is $11.50. This is currently under renovation right now. We just purchased it. It will be coming available. Well, it is available now. It's under renovation, and then we make it available for rent. And then, of course, we close on the property. So we have it cash flow positive for you right off the bat there. And that $11.50 is based on our extensive experience in the area. You got your property taxes here, homeowners insurance rates, a little bit under $900, no HOA dues, and your standard property management fees are right there. Wanted just to show you just the map so you know how much confidence we have when setting those rent rates. Because what a lot of people don't realize is that your estimated returns on investment can swing dramatically just by missing the rent by $25 or $50. It can have a dramatic impact. In fact, let me just show you the difference there, right? If this property actually rents for $1,100, but you work with another provider who told you $1,150 on this one, let's see what it would do to the estimated return on investment, right? That drops you an entire point right there just by missing the rent by $50. So when you're buying a rental property, hopefully with JWB, but with any provider out there, make sure that they have extensive experience and a lot of rental comparables to draw off of so that you know that they're setting the right rent. Because what a lot of turnkey companies will do is they know you're really sensitive to what this return on investment is. And so if the rent is $1,150, they might push it a little bit on the eval to make it sell better. And so let's just say that really rents for $1,150, but they put $1,200 on here. You can see that jumps up to almost 10%. And inherently, people like better returns. So that is something that others do. You need to do your due diligence to make sure that somebody has that experience in that area, those rental comparables, so that it makes sense to you that the rent rate is what it is. So let me show you what JWB does, right? This is our map of Jacksonville here. We've got the Atlantic Ocean over here. We've got the St. Johns River. And all of these blue dots are all of the properties that JWB has purchased, renovated, or built, has sold to clients, and continues to do the management on. And this is that experience literally in a graphical format for you. The property on Holcroft is right here. All of these blue dots up here, this is called the North Side neighborhood for us, which is one of our 4 neighborhoods that we love. We have extensive experience there. And this is what I mean by extensive experience. I mean, look at all of these properties that we manage literally within a mile radius, right? Like if I start to actually play this out and take the ruler here, right? A mile is out here, right? Like look at all the properties that we have rental comparables on that are within a mile radius, right? What that should communicate to you is that this rent number has it's seriously substantiated by real market comparables. And also, we have an ability to make sure that we can get long-term residents who want to stay in these homes, and we can acquire them quickly for you. So we reduce your vacancy costs. So we reduce your maintenance costs to make sure that you don't have property turns as often. It's one of the reasons that our average resident stays over 4 years in our homes. It's because we do the same thing over and over and over again, and we do it for a reason. Right? We do it for a reason because when we do the same thing over and over again for you, it creates consistency. Again, it creates an environment where we can perform and hopefully under promise and over deliver. That's what hopefully will keep you coming back, buying more properties with JWB, telling your friends and family about it. And that's how we can all win together. So this home on Holcroft is available. If this is something you're interested in, please reach out to my team. If you're not a current client yet, you can schedule a time to speak with us by going to chatwithjwb.com. That's chatwithjwb.com. You can go right there, schedule a time, jump on my team's calendar. And if you're already a current client, really easy. You have a JWB portfolio manager. Just reach out to your portfolio manager here with us. Let them know that you're interested, and we'll go ahead and get the ball rolling for you. Appreciate all of you being here, and happy investing.